Madhu, good morning to you all once again. Thank you for joining us. Do you think investors should worry about what Mr. JT will present today or Donald Trump can do in coming days?
Oh, he already is.
For today and for the next few days, let's focus on Mr. Jetli. We have 4 years to focus on Trump.
So, Madhu, my question
Are
is
you
that
saying Mr. Jaitley is not going to last that long?
No. I'm not saying that. I am saying
I
from
know.
a market perspective, today Mr. Jetli is far more important.
we've seen a very strong pre-budget rally.
Yeah.
One of the sharpest pre-budget rally in last 12 years is what I have been told.
Yeah.
What are the chances that irrespective of how good, bad or poor the budget is, markets will see profit booking? Because earnings are not there, markets have gone up because of liquidity.
It always goes up because of liquidity, Nikunj. When did it go up without liquidity? So I don't think there is anything new here. But let's look at in the context, you can look at wherever you want. If I look at it from the 1st October, market is still down 300 points. If I look at from the 8th November, we are up 700 points. So I think it is to be looked in the context of what has happened in the last 3 months. I do not think that we have seen a steep rally. As compared with a lot of global markets, we have actually underperformed if I take it from 1st October till now. And now, for the first time, you could have local investors as well as the global investors buying the market. So I'm very clear, regardless of what happens, the trend is not broken. If it is a really big, nasty, bad surprise on capital gains, you might have a few hundred points of correction.
Madhu, why are markets so scared that short term could become part of business income? And the reason I'm asking you this question is because for a trader, large part of the trading profits are already part of business income.
No, it is not. So what is the market scared of? Market is scared that in the short term I buy, I pay 15% tax today, plus I pay STT. If that gets clubbed into my business income, let's say for that also if I have to pay 35%, and short term is between 1 to 3 years and long term is above 3 years, then the whole economics changes. And those of who are justifying this move, saying that in real estate you have 3 years, in bond, in fixed income you have 3 years, and so the equity should also be 3 years. The risk profile of real estate, the risk profile of fixed income is very different than equity. So if you need to encourage equity investment, you have to give some extra swap than you have given in fixed income or in real estate. So I do not think it is fair to equate that, and that is why this differential has existed till now.
Talked about the basic thrust of the budget, but do you think for a common man to jump to any kind of a conclusion immediately after the budget should be avoided? Because this time the budget is coming a month early. Railway budget will be part of the speech. Planned expenditure and non-planned expenditure are also going to be clubbed. Yeah. And it's difficult to assume that what will happen to indirect taxes when your fuel kicker is missing.
Sure. So as I said and I highlighted that there are a lot of firsts which are happening this time. So the numbers, I think there will be a fair amount of confusion as soon as the speech is over. So you have to digest, what they are saying, that whether they are taking the impact of the GST, whether the VDIS 2, how much money did the government collected, will that be accounted for or not? Then third thing is railway budget. So the whole denominator and the numerator changes. So what is the impact of that on all percentages which are being calculated? But one thing I must say that any budget we have to go into fine print, but this budget may have a more fine prints than what we are used to, and as well as the presentation of it. But I must emphasize one thing, Nikunj, which market seems to have missed. The relevance of preponing the 1st February, to my mind, is a lot. Because in a normal course, you start implementing the budget from June onward, because it takes 2-3 months. This time around, you might have the kickoff of the expenditure from the month of late April or in May itself. So that gives the government
so Q1
2 months.
Of FY18 is going to be a strong both in terms of government spending and also
Exactly.
in terms of investment spending.
Exactly. So what happens always, you have June and then there is a monsoon, so you can't do capital expenditure. So this year, if you see in this year itself, you have seen that the capex expenditure is minus 10 or 12% till December. So that may not be the situation next year.
Okay, Madhu, we would have loved to chat in more, but
No,
we're going to let you go on that
thank you, I have
note.
to go.
Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.